financials, banks up there. ITC was a big drag yesterday, one of the top drags yesterday. That is participating on the upside as well. There is, of course, the Karnataka elections which are going on. The voting is on. Later, post 5 or 6 p.m., we'll get the exit poll results. And then around US market time, we'll get the core CPI data for the month of April in US. And those are the two big triggers which I think is perhaps keeping the market a little subdued. Wait and watch. Let's get the data and then react to it once you have the full facts. That is going to be tomorrow. Rima, hi.
Hi, but whenever we had these big events, the markets never reacted, either before or after. And when we were least expecting it, the markets, and without any trigger, we saw the markets run up. So yes, we've got that big inflation print. Let's see how the markets react. Domestically, we're going to be watching out for L&T and Dr. Reddy's. These two report their numbers post-market hours, and both the stocks have slipped ahead of numbers. So L&T and Dr. Reddy's today are at the day's low. Dr. Reddy's down 1.25%, and L&T slipped close to about 0.7%. Pull up that intraday chart, and you would see that slide. Outside of the index, it's the PSU banks, the mid-cap banks, which are sulking quite a bit. PNB down 4%, 8% gone in the last 3 days. UCO Bank has slipped 1.5%, 5% lower for the week. Bank of Maharashtra, Union Bank, across the board, many of these banks are selling off quite rapidly. And it's not stopped yet, right? This has been going on for the last 2-3 days now. Yes,
and this is because of what we've been discussing all along, the expected credit loss provisioning norms, which are not yet final, as in, we don't have an exact implementation timeline, but eventually the RBI will probably move the system to it. And, in anticipation of the higher provisioning, we're seeing the pressure on the PSU banks. But just back to some more movers and shakers, a lot of the reactions today are very, very news or earnings specific. One example would be Latent View. Now that stock is down about 11% as we speak. That's a very negative result reaction that's come in. On the upside, I mean, you have a PSU like a Shipping Corporation of India, which is up about 6-7%. Mahanagar Gas is seeing some follow-through buying. We spoke with management as well today. So it's all very, very stock-specific, very news or earnings-specific. That's the overall market. The advance decline ratio is very even, Stephen, almost neck to neck right now between the advances and the declining stocks. So that's the picture. There we go. The lines are coming up. So good fight between the bulls and the bears. We'll get going. Lots lined up on the show as always, but perhaps let's kick it off first with the closing strategies. We do have Mitesh joining us as always. Mitesh, good afternoon. Good to have you on the show. Extremely flat on the index. Do you have any strategies, index strategies, or are you sticking to stocks?
Good afternoon, Survi. I think on the index, don't have any trade purely because of the fact that my expectation and the overall outlook is that the markets might actually consolidate. I wasn't expecting a very flat kind of market, but it's mildly choppy. But I think it's still a market which might contract given the fact that we are just coming off from a rally and are quite overbought on the intraday charts, and we haven't had a decent or significant pullback. So I think there's a higher probability of markets taking a breather, a pause, and possibly 18,340, 350 on the upside, and then 18,050 on the downside could be the boundaries. So with that kind of outlook, I think the trading is more of a stock-specific basis. I have 2 buy calls. LTTS is something which has come on the radar play. It's given a good price and volume breakout. So buy here with a stop at 37.80. Look for targets of 39.50. And the other one is HDFC AMC, which also has after a pullback yesterday is picking up steam again. So that's a buy as well. Keep a stop just below today's low of 18.18, but for targets of roughly around 18.95.
Mitesh, do stay on. Need to get in a few more updates on individual stocks. Aarti Industries is under pressure on the back of some fresh downgrades. They came out with the Q4 numbers about 2 days back, but yesterday was the conference call. And the company has guided for an EBITDA improvement of 15% next year. And this is lower than what the analysts were anticipating. So there were a few downgrades, which is putting pressure on the stock, and it's down nearly 10%. Sonal joins in with the details. Sonal.
It is, and that is because of weak set of numbers, and also the commentary did not inspire any confidence as far as future outlook is concerned. It was a miss on all parameters in Q4, and on the back of this, Kotak Institutional Equity says that they are lowering their EPS estimates. Miss was due to maintenance shutdown and also subdued demand from discretionary sectors, which is around 50% of Aarti Industries revenues. The FY24 EBITDA guidance of 15% by the company is also below the analyst expectations, and that is something that they do not like. hike. They have trimmed their FY24, FY25 EPS by 1 to 6%. And for FY25 as well, Kotak Institutional Equities is estimating EBITDA a little over 1,600 crore rupees, which was around 1,650 crore rupees earlier. So they are trimming their expectations across the board. Centrum says that Q4 performance was muted. EBITDA was 9% lower than their estimates, and margins were also impacted owing to sales to non-regular markets, which led to lower margins for the company. Management has guided for 25% volume growth, while 15% EBITDA growth, which is again lower than expectations. They have lowered their FY25 EBITDA estimates by 2 to 5% and earnings estimates by 6 to 8% for the next 2 financial years. Nirmal Bang has gone ahead, downgraded the stock to a sell, cut their target price to 430 versus 500 earlier. FY24, which was earlier expected to be strong, is expected to be under pressure now, mainly due to demand slowdown in the developed markets. Also, exposure to discretionary categories, it remains high at 50%. So global recovery in these sectors is very important, and if that doesn't happen, pressure could continue as far as Aarti Industries is concerned.
Okay, well, Sonal, thank you very much for that. Prakash Devan is joining us to take some questions. Prakash, hi, good afternoon. You know, even before this 9% cut today, Aarti had fallen some 50% from its highs in 2000, I think late 21. And now this, valuations are not demanding, but the outlook was still very muddled. We had the management with us yesterday. They put out numbers which were seemingly very aggressive, much better than what they've delivered in FY23. The market is, of course, not really believing it. What's your sense?
Good afternoon, Prashant. So, yeah, I know it's quite a complex spot to be in. The management sounds confident of recovery. The market doesn't want to believe that. And, this is something which we saw coming 6 months back. And I remember one of the shows when Rima and I were talking about the kind of slowdown that was being witnessed, particularly in the European markets on the chemical side. Now that is something which is very clearly, veritably out there. Aarti's put in a lot of effort and resources towards expanding in the last 24 months, if you see. And all of that is going to only delay things in terms of getting better return ratios to start clocking it. Now, the market is not worried about Aarti's performance as such, but all market leaders who sit on category leadership in terms of market share will actually take the brunt, because they are not into niches which could survive or which could which they could get away with. But these are mainstream product lines where the market leader will get impacted if there's a demand contraction, and that's exactly what's evident. So I think it's the market would like to see the demand side improve rather than a stock specific change in terms of strategy, in terms of performance. My sense is Aarti will deliver. It's a great franchise, the way they built their capacities. And very high efficient capacity with the integration of a different level. It's just a matter of time before they start kind of reaping the benefits of all of that. But it's going to test your patience, given the contraction in demand, Prashant. So that's precisely the single biggest factor. And remember, we've heard Berkshire Hathaway, the AG very clearly highlighted the fact that the US will see a lot of inventory, slowdown in inventory pickup. There will be pricing pressure. There will be a slowdown that the recession will percolate into this thing. And that's going to be global eventually. So I don't see any reason why to ignore that. And you would have to give it time. But, FY25, 1,500, 1,600 crore EBITDA is a great scale to be at. But you'll have to wait for that to trigger it. Closer to, those levels, maybe, middle of FY24 is when the market will start discounting things positively. But till then, yeah, it's going to be testing times.
All right, that's Aarti Industries, a stock under severe pressure today, 10% lower. But then let's talk about the other one, which I was just mentioning, which has actually reacted really well. A PSU stock, Shipping Corporation of India, jumping over 5-6%. This after reporting what looked like a pretty strong set of numbers for the fourth quarter. Let's go across to Mangalam first to understand what exactly worked for SCI in the quarter gone by. Mangalam.
Well, the beauty about the shipping industry is when things don't work, there are things that work as well. So it's the diversification that works for them. This time around is the tanker segment that worked for Shipping Corporation of India at a time when the dry bulk index is lower and they're losing some money in the liner segment as well. So just to run you through the numbers, a revenue growth of just 8% led to an EBITDA jump of 42%. That meant margins expanded from what, 25% to about 33 odd percent. Add to that some tax credit and you have a big boost on the net profit from 148 odd crores to 380 crores. So that's a near 150% jump on the bottom line. About the segments that did not work, we saw the liner segment where the revenues dipped by almost 60%, and we saw that the operational performance turned into a loss from 180 odd crores to a loss of 62 crores. And then even the bulk business saw a revenue decline of 39%, and out there to near 106 crore worth EBIT was eroded in this quarter. But then the big delta was the tanker business, where the revenues grew by 82%, nearly doubled. And at the same time, the operational performance out there turned from 115 crore EBIT loss to about a 310 crore EBIT gain. So that's a delta of nearly 425 odd crores coming in. Add to all these things, they will soon, demerge and relist their land assets. So that's a trigger. The other eventual important trigger for Shipping Corporation of India, just like it is for most of the PSUs, is privatization. Shipping Corp more so than the others.
Mangalam, thank you very much for that. Prakash, any thoughts on Shipping Corp? It's quite like a VC portfolio, right? Even if two of your companies don't do well, but one fires for you, it can give you a solid return. And this time for Shipping Corp, it's the tanker business. Any thoughts on, the business? Because they do have those triggers, as, Mangalam was pointing out, the, land asset demerger or privatization.
So yeah, absolutely, Rima. I mean, it's the nature of the business is so it's lumpy, it's capex oriented, and it's absolutely something where there are huge entry barriers. Now, Shipping Corporation of India sits on a portfolio which is so difficult to replace that that's one of the reasons why the government probably doesn't want to sell these family jewels at a time when it doesn't need to, right? So it's only when they start seeing that businesses are in that position to be absorbed and it's not a very significant size, so it is manageable. I'm sure the land demerger is probably the stepping stone towards a full privatization. And strategically, privatization also means it's just going to be dilution of the government stake and not necessarily handing it over to private operators completely. But, the tankers business is likely to continue growing as long as the Russian oil feeds our refineries in a significant way and we keep on exporting the finished goods to the rest of the world. So I don't see that changing. In fact, the dependence on exports being more oriented towards larger engineering products, industrials, is something which is also very helpful for the reverse trade in case of Shipping Corporation of India. So they will probably definitely start seeing efficiencies come in. But the big trigger, of course, is re-rating is going to be from the eventual privatization, which could take much longer. But it's a great stock to have in your portfolio. Buy it on bad days, buy it when the market is soft. And it does get impacted because there's a huge retail participation that keeps on changing hands. So I have seen it move in bands which are fairly promising if you buy at lower levels and probably book out at higher levels. But eventually, I think it will get re-rated very significantly over the next couple of years.
Rima, it's a completely new one. Every time I look at SCR now, I'll think of a venture fund portfolio.
That's probably the smartest anyone can make a PSU sound. That was a new spin, absolutely, Rima. But Prakash, before we let you go, we are getting closer to a weekend, so I want to get your view either on a food stock, or food delivery stock, or maybe a drink stock.
It's Wednesday, you know that, right?
It's okay. Theoretically, tomorrow's Thursday, and eventually we'll get to the weekend as well. But no, I mean, jokes apart, the kind of moves we've seen, not today in Sula, for instance, there's been very steady buying in Sula. Varun Beverages is the other one from the beverages space. And I thought yesterday's Westlife numbers were quite interesting as well. The market was sort of a little unhappy. I think the growth numbers were not, or the same-store sales growth was not as much as what some of the analysts had penciled in. But any thoughts, food or drink?
Yeah. So as Rima said, let's keep the drink part out. Of course, Varun qualifies more because of the mercury rising and the kind of scale up that they've done, the expansion that they've done. But my focus on food stocks has probably brought it, and I'm glad you asked this question because we found out that was a space where there was huge polarization happening. I mean, while you have many more stocks to choose from, I mean, the likes of restaurant brands or Sapphire or in addition to the Jubilant and Westlife of the world, there's one play which I personally feel is kind of under owned or under discussed or whatever, is not yet in the spotlight. That's Barbecue Nation. And why I say so is look at the profile that this company kind of caters. It's a very well-defined niche, but the niche is almost like getting omnipresent in tier 1 and tier 2 and now tier 3 cities. Barbecue Nation used to be $1,100 on good days, okay, it's just last year sometime. And then they started getting hit with inflationary impact of raw material prices and all. But there's absolutely no demand let up. In fact, if you do a channel check and check out the closest BBQ Nation outlet in your city or your neighborhood, you will realize that you really have to seek a booking out, a reservation to be made or using their app and all of that. And they actually don't rely on deliveries and all of that. So there's no cost leakages or cost overheads which they need to grapple with. Real estate prices had been an issue. That also is kind of rationalized. My sense is this is one company which will probably take time to start delivering. But the kind of, and they have a huge depreciation because of which the cash profits don't kind of, translate into PAT. But there is going to be a very significant change given the cash flows and the kind of store growth that they've had. Watch out for that is my guess. It's been disappointing, but then, you buy it at a bottom and not when it's already at its peak.
Now that you say it, Prakash, I agree. I've seen it with my own eyes. I mean, I'm talking about a tier 3 city in this country where on a weekday, a Barbecue Nation outlet was packed. Now that you say it, I do remember this sort of channel check from the ground a couple of months ago. Okay, all right, we do have to take a break. Prakash, stay on. But as we get into the break, here's an exclusive conversation. Global technology leader Cisco is expanding its footprint in India, and as it does that, it will start manufacturing in the country and targets over $1 billion in combined exports and domestic production. With this latest investment, Cisco will cater to the growing demand from customers in India. CNBC-TV18's Shireen Bhan caught up with the Cisco chairman and CEO, Chuck Robbins. Here is a slice from that conversation.
We actually have made the decision to build a full manufacturing node for Cisco, global node, that we will use both for building products for India, but we'll also be exporting out of India to the region, to Europe, etc. So we've been here to announce that this week. We're very excited about it. I think the time's right. Our team's excited. It's certainly, I think the supply chain ecosystem is creating a broad-based presence in India, and I think it's just a great thing for us to do.
Let's talk about this manufacturing aspiration, because in many ways this is the next phase of Cisco's journey here in India, a journey that began in 1995. I was there in Bangalore when you launched your R&D center here in India. How significantly are you going to be investing in setting up this manufacturing capability? I understand that this is going to be coming up in Chennai. Give me an execution roadmap, if you will.
Well, first of all, I think as I leave India this week, the one thing I believe, beyond a shadow of a doubt, is that for the next decade, this is the biggest growth opportunity that we have as a company. And so if you take that statement, then you would translate that to this would be one of the biggest investment areas that we'll have over the next decade. And I think this is just the very beginning. We're going to start with manufacturing a couple of our high volume products. We're going to start with one of our high volume switches that goes in the middle of data centers, as well as one of our core routing platforms that is a big product that a lot of the carriers use to build out backbones for 5G. And then once we get that up and running and get the kinks worked out, then we'll expand the product portfolio from there. But it's not limited to manufacturing. Between direct and indirect employees today, R&D, operations, et cetera, we're in the mid-30,000s here. We're investing in skills and capacity. We've trained over 1 million Indians with Network Academy. We've got a commitment for 500,000 cybersecurity specialists in the next 24 months. We talked this week with government officials about investing in R&D in emerging technology areas like 6G, and so there's a lot of different areas that we're considering, and I think it's just going to be a natural place for us to invest over the next few years.
Let's pick up on that statement that you made about India being one of the sort of best performing markets for Cisco over the next decade, and that is going to fuel your aspirations and your investments here as well. The 5G opportunity, and we've now seen virtually pan-India rollout as far as the 5G coverage is concerned. What do you make of the way that that's panned out in India? What are the use cases that you're now considering, and what could it potentially mean for Cisco going forward?
Well, I think the speed at which 5G was deployed here was pretty incredible. And I think it is part of the overall digital strategy for the government, which is that digitization has to be at the heart of growing this economy to $30 trillion over the next decade. And I think that we all know that getting people connected is the first step of creating an inclusive environment for them. We can then educate them. We can then provide some levels of health care. We can then hire them and actually have them work. And so I think just the basic connectivity and bringing them into the economy and providing services to them is the most important use case we can possibly have right now. And it's been really impressive. And from Cisco's perspective, we've obviously worked with the provider of those 5G services to help them build out their networks, the infrastructure, the backbones that have to be built to accommodate this traffic, and over time, real-time video applications, et cetera, will put a lot of load on the networks, and we're working closely with the customers here to actually make that happen.
So what is going to be India's contribution to Cisco's global revenues in the next 5 years, given the aspiration that you have? I know it's among your top 5 performing markets globally, but what is it going to mean in terms of contribution?
I don't see any reason why it couldn't get to 10% of our revenue over the next several years.
The domestic opportunity as well as the export opportunity that you're hoping to cater via this manufacturing facility. So $1 billion in domestic and exports by when?
Well, that's just the first year. We would expect that, and then as we add more products to it over time, then that will increase, obviously.
So when do you actually start manufacturing?
We expect to have the first products rolling off in about 12 months.
Welcome back. Some auto names are doing well. So Eicher Motors and Maruti Suzuki both have moved to the high point of the day, and Escorts Kubota just reported their numbers. Sonia joins in with the first cut. Sonia.
Well, thanks a lot for that. So, for Escorts Kubota, the top line is pretty strong. This time around, the tractor volumes, the construction equipment segment and the railway segment have done pretty well. So nothing wrong as far as the top line is concerned. It's a 17% growth on a year-on-year basis, coming in at 2,183 odd crores. The poll was, 2,198, so largely in line with expectations. But on the EBITDA front, the EBITDA is down 6.2%, coming in at 236 crores on a year-on-year basis. That's a fall that we've seen. And the margins as well have fallen to 10.8%. That's also because the raw material costs have escalated this quarter compared to what we saw same time last year. So that's something that has hit the margins this time around. There's also, and that has impacted the agri sector, which is the tractor sector EBIT margins, which have come in at sub 10% compared to 15.4% same time last year. There's also a one-time loss that Escorts Kubota has reported to the tune of 25 odd crores, and that has hit the bottom line. The net profits are down about 8.2% at 185 crores. So although this quarter's numbers, there is a one-time loss and there is raw material pressure, the stock, has not seen too much of a fall because the core segments, which is construction equipment, tractors, as well as railways, which is now a big portion of their business, that has performed well. And the demand trajectory is expected to be good as well, since there's a recovery that we've seen in rural demand. So yes, this quarter's numbers are slightly on the weaker side, but going forward, the prognosis has been good.
Okay, thank you very much for that. Prakash, any thoughts on Escorts Kubota?
So, when you see these kind of things on a one-time loss and the kind of shrinkage in certain other margins, given the change in the product mix and the portfolio mix, it's all thanks to the Kubota, play kind of getting center stage. Escorts Kubota will soon be a Kubota company in that true sense. Their products are far more superior, far more versatile in terms of, size and scale. So what the company will end up achieving, as Sonia rightly said, is that as soon as demand picks up, and that is yet to happen, usually it happens post-monsoon when you start seeing, all the positive impacts of impact of all the money coming into the hands of the users. The railway and the earthmoving equipment segments are something which never contributed significantly in this business, but that is changing rapidly. So I think you're finding 2000 is probably a bottom for this stock. What you'll see probably, in the next couple of years is the stock will actually get re-rated. The corporate governance quality is also likely to start getting looked at very positively. So all that put together makes it a great stock. It's not going to be celebrated at this point in time for sure. But, the moment the trajectory for the segment, the farm equipment segment revives, I think Escorts will definitely outperform some of the other players like M&M on this particular part. So very, very positive on it. But as I said, it's a contra bet. You'll have to stay put for at least the next 2 quarters before the tide changes. But these numbers tell you that the bottoming out process is evident.
Okay, thanks very much, Prakash. We'll leave it there. Appreciate you joining in with that perspective. It's a pleasure. Well, you got the market, which is still there with a 20-odd point a pop. Not a decisive move by any yardstick. 1:1 advance decline ratio. Even that number, that gap between advances and declines, it is waxing and waning. I mean, right now there is a 70-80 point stock difference between advances and there you go. It's almost 1:1, no difference. Shivani Sarkar Kurian is Senior Executive Vice President and Head of Equity Research at Kotak Mahindra Asset Management Company. She's joining us right now to take some questions. Shivani, good to have you with us here. The fund managers from the Kotak house that we've spoken with over the last 2-3 months, I mean, actually since the end of the third quarter, there has been sort of a sense of caution on, earnings for FY24, potential for more downgrades. With 50% of fourth quarter earnings season now behind us, Shivani, what is your team telling you? What kind of downgrades or upgrades are we going to see for FY24?
Hi, Prashant. Good afternoon. Pleasure to be here as well. So you're right. When you look at the earnings season has so far been largely in line with estimates, especially when you look at the Nifty companies that have reported. So as of yesterday, about 29 Nifty companies had reported, and at a headline level, overall numbers have been largely in line with estimates. Margin benefits are now being seen with commodity costs and input cost pressures coming off, and on a quarter-on-quarter basis, in some pockets, you are starting to see that margin benefit come through. However, when you just go a little deeper and look at numbers, while the Nifty headline numbers and earnings estimates for FY24 remain largely intact, with consensus expecting mid to high teens earnings growth in FY24, when you look at the broader market and say you look at the top 200 companies, there you are starting to see wide dispersion in terms of earnings performance. So it's not a very uniform performance. Also, within sectors, what is clearly standing out is that the domestic facing sectors are delivering better in terms of earnings. And therefore, even at a Nifty headline level, financials continue to be the key driver, along with a few companies within the automobile space, which has been driving the overall earnings growth trajectory for Nifty. The global cyclical sectors, which is oil and gas and metals, continue to drag down earnings. And this quarter, of course, IT has also been somewhat of a disappointment. And that has resulted in some earnings downgrades within the sector, which have been offset by the upgrades that you've seen in autos as well as financials. So net, we believe that so far, if you look at Nifty trajectory for FY24, earnings expectations are still fairly intact. However, this is going to be a year when you look at the broader market, there is going to be dispersion in terms of earnings delivery within stocks at a broader level. So therefore, stock picking is going to be very, very crucial this year.
Shivani, ITI nor technology per se was a big negative surprise. No one was anticipating such weak numbers from the big boys. But can you highlight some trends where you were positively surprised or negatively surprised outside of technology? Because banks, while they've been good, largely in line with what the street was anticipating. What were the key trends that you would take away from these quarters' numbers?
So you're right. So far, apart from technology, where there was some amount of negative surprise, which is also maybe somewhat stock specific in nature, the numbers by and large have been in line with estimates. So there have been no major negative or positive surprises as such. While banks have done well in terms of earnings delivery, again, as you rightly pointed out, a lot of that was baked in terms of estimates and expectations. I think one key factor to look out for, or maybe a couple of trends that we want to look out for going into maybe sometime in FY24 is one on the auto space. If the overall growth trajectory continues to improve both for four-wheelers as well as for two-wheelers, given that there are some nascent signs of improvement where rural demand is concerned, that could be an area where you could start seeing improvement on the earnings delivery front. The second, as a theme that we are looking out for, is on the rural space. Of course, there are conflicting data trends and nothing concrete as such. But at the margin, it does appear that some amount of the impact or downtrend that we have seen on the rural demand is bottoming out. And therefore, that could be one area to watch out for. And that would have impact for sectors such as FMCG, two-wheelers, for instance. Apart from that, in terms of our portfolios, where we are looking at sectors, we continue to remain positive on banks. We believe that while the earnings delivery is possibly baked into numbers, valuations continue to be favorable. And therefore, the financial services space is something that we are positive on. Apart from industrials, manufacturing, capital goods, autos, and cement. So these are some of the sectors which are all domestic facing sectors which are growing and contributing to earnings growth, where we continue to be positive on.
Okay, got that. Shivani, since you're talking about banks, hi, good afternoon, Surabhi here. So since you're mentioning banks, of late, this chatter is growing a little louder. The impact of the new provisioning norms, I mean, they've not yet come into force, but at some point in time, that draft circular will become official and we'll move towards this expected credit loss system of provisioning. Do you see that having any sort of a material impact, and what specifically is your call on PSUs? Because that's where the hit will be perhaps a little bigger.
You're right, Surabhi. However, when you look at the draft circular in terms of implementation and what will be the final outcome, we'll have to still wait and watch. The way we are approaching this is that when you look at the banks and the way to understand what could be the possible loss or the possible impact would be, one, to look at the portfolio composition. Therefore, higher retail share where credit costs have been lower will mean that the impact is lower. Also, the provisioning levels that banks are carrying today, higher the provisioning coverage, higher the contingency or extra provisioning on the balance sheet, lower will be the possible impact because of the implementation of this Indices or ECL methodology. And thirdly, of course, the capital position for banks. Now, with this construct, what we believe at this point in time, the private banks are better placed. Number one, they are carrying significantly higher levels of specific provisions on their balance sheet. So anywhere between 75 to 80% provisioning coverage ratios, apart from extra contingency provisions. And secondly, in terms of capital, clearly the private banks stand out because they carry excess capital over regulatory requirements as well. So, within the PSU pack, our preference has been for the larger PSU names where there is comfort on the liability franchise as well as growth remains intact. But overall, within banks, our preference for the private banks, specifically the larger private banks, remain.
Okay. By the way, the markets picked up a little bit. We were up 20, we're up 50 now on the Nifty, and this is a sharp move that we're seeing developing. Let's see if this holds. But this has come through in the last 8 minutes or so of trade. From 18,273, we're at about 18,320 now. On the index. Look at the bank Nifty as well. I mean, it's basically Reliance and banks. Reliance is contributing 11 points. HDFC Bank is contributing 6. IndusInd is contributing 4. Bajaj Finance 4. And then there is an ITC as well, which is contributing 3.5, 4 points. So index points, that is. So the market's looking a little better. I mean, post 3 p.m. Let's see how that pans out. Look at Varun Beverages. I mean, stocks up 7.5%. 1620 numbers, of course, were super strong. I think it's one of those companies where earnings expectations have been upgraded for FY24 post fourth quarter performance. But I mean, just a absolute stunner of a wealth creator over now a very long period of time, very consistent. Shivani, do you? I mean, I don't know if you can talk about stocks, but do you own this one? Any thoughts at all?
Sorry, Prashant, I can't talk stock specific, so will not be able to comment on this particular name.
All right, fair enough. We'll leave it there then. Thanks very much, Shivani. Appreciate you joining in and running us through what you make of the markets overall. 50 on the Nifty at 308. 22 minutes to go for close. Nimish is here with D Street Chatter. Of course, his check across dealing rooms to tell us which are the stocks in play and how sentiment looking. Nimish, what are you picking up?
Hi Prashant, I was just hearing you about Varun Beverages. Remember, it was part of my D Street Chatter yesterday, so just trying to take some credit. Anyways, markets are, again, day of consolidation on the broader markets, but again, the feedback is that there is good amount of buying interest from large institutions. That's been the part for the last many days now, and that's been the case today as well. In fact, even in today's trade, I believe there is a small market at close basket buying. So maybe the last half an hour may see some bit of spike on the Nifty and in the large cap names. That's the overall feedback. Again, from a positioning point of view, within financials, it's the private banks which are well bid again in today's trade, and there's a good amount of buying interest in that particular pocket. Even in the last half an hour or so, even the PSU banks have seen a bit of an uptake. So it looks like a bit of short covering as well after 3 days of underperformance in the PSU bank stocks. But the one space which has seen some bit of profit booking is the consumption basket. Across consumption names, whether it's Dabur or Jubilant, all have seen some bit of profit booking in today's trade, largely from the larger FIs. So net, the consolidation continues, but there is buying interest from larger FIs, and that's tilted towards the financial names.
Nimesh, EPL, SL Propack, the erstwhile SL Propack is a stock which is up 11%, and that's made it to your list today. Can you tell us what's happening in EPL and then the other stocks that you're tracking?
Sure. Okay, so let me start with EPL first because you asked about it. There are big volumes in that stock today. I believe, again, like what happened in Varun yesterday, there was a clean out trade from a leading FI. Looks like even in EPL, there is a clean out trade today when long only fund has sold out and some domestic funds have been buyer, and including the HNIs as well. So that probably explains the big move in EPL into the state. But remember, this stock has been a big underperformer, and now this is backed by private equity Blackstone. So, and again, this company is going to be a big beneficiary of falling crude prices because raw material prices will go down. So I guess that's the play in EPL, and hence a big move in that stock. Having said that, apart from that, the couple of other names which are part of my list, first is IEX. Some bit of buying traction seems to be back in that stock as well. So the delivery volumes are going to be quite high in IEX, and I believe some long-only funds have been active buyers in IEX in today's trade. So that's the reason why IEX is buzzing. The second stock is Zomato. In Zomato particularly, I understand there are two-way flows, and that's why the volumes are quite high in the last many days. I believe one of the private equity investor has been a seller. And the other end, some domestic funds have been buying out that private equity stake. So the volumes are on the higher side, but there are two-way flows, and domestic mutual funds are active buyers in Zomato for the last many days. And the last stock is JM Financial, a small block, close to 50 lakh shares change hands in today's trade. After that, the stock's seen a bit of an up move as well. And I believe one of the HNI investor was an anchor in today's block. So disclosure may not get announced, but post this block, some bit of traction in JM Finance as well.
Okay, thank you very much for that. Get into a break. On the other side, we'll get you a few trades from our technical experts. Mitesh will be with us.
Welcome back. So let's get back to Mitesh and see what other trades one can work with. The market actually is absolutely flat with a slight positive bias. Now you can say that much, at least 50 points up on the Nifty for the time being. Mitesh, so back to some ideas. What are the fresh calls you're looking at?
So on the stock side, I have MGL. You know, we've had a buy earlier on the stock with the numbers and the gap up which happened yesterday, and today I think it's closing at the day's high after going through some pullback. MGL is a BTST with a stop at 1089 for targets of 1115. And the other one is Metropolis recovering from a good correction, now trying to get into some kind of upmove. That's a BTST with a stop at 1349 for targets of 1375.
Okay, thank you very much for that. Some statements coming in from Escorts about their market share in the quarter gone by. The domestic tractor market share has come down by 50 basis points to 10.9% versus 11.4%. So 47 basis points lower year on year for the domestic market share. Let's give you a roundup of all the big earnings. This is our special segment, Earnings Corner. We tell you the key earnings to track for the rest of the week. So today the big one is going to be L&T and the other one is Dr. Reddy's. Both anticipated to report numbers post-market hours. Tomorrow, Asian Paints, Eicher Motors and Siemens, to name a few. And finally, on Friday, the big number to track will be Cipla, IGL and Tata Motors. So let's take stock of the earnings from tomorrow's list. We've got Asian Paints and Eicher Motors. Both Mangalam and Sonia are here with us. Mangalam, let me start with you. Asian Paints, we've had strong numbers from some of the pairs. What can we expect from Asian Paints?
Well, it's similar. In fact, a good quarter expected from Asian Paints this time around because we do have a bunch of triggers. The first one, of course, is raw material inflation cooling off. The second one is that there's a favorable base. Remember, same time last year, we did see weakness, largely because a lot of the demand was preponed in the third quarter of last year because the company had taken big price hikes as well towards the end of the third quarter. And the most important one is that a lot of the festive season demand this time around from the third quarter has shifted to the fourth quarter. So these are factors that will work for the company. 11.5% jump on the top line. 8,800 crores is what the street is working with. The EBITDA grows a little faster. 18% growth is what we're anticipating, which would mean a margin expansion of nearly 100 basis points. And the net profit on that jumps about 28%. You're looking at a number of around 1,123 odd crores. Decorative volume growth this time around for Asian Paints would be in the range of 10 to 12 odd percent. Value and volume growth are likely to be similar, mainly because most of the price hikes from last year are in the base. The additional 3 to 4% price hikes that the company took thereafter will perhaps be adjusted for in the product mix, as a result of which value and volume growth are likely to be similar. Important thing to watch out for: commentary on demand, but more importantly, commentary on what the company's talking about in terms of competition which may come in the paint industry. Yesterday itself, we heard about Pidilite's entry in the segment.
Okay, so that's Asian Paints and the key watch points. Thank you very much for that, Mangalam. Over to Sonia. Sonia, what about Eicher Motors? But I remember the other two-wheeler guys have had a pretty good show, right? TVS and Hero Moto. So can it be a hat-trick with Eicher along?
It could be, because Royal Enfield had a great launch, the Hunter, which did very well, and that led to a good volume growth in this quarter. So if you look at it, the volume growth has come in at 18% at 219,000 units, and that is also because the supply side constraints have been easing and the Hunter had a very strong showing. So that will lead to a solid revenue growth for Eicher Motors. The EBITDA will pick up as well. Margins are expected to be largely quiet, largely flat. That's because the export volume growth was not great. It was just about 4 odd percent. And the Volvo Eicher commercial vehicle margins will grow, but not as much as the Royal Enfield business. So all in all, good set of numbers expected. On the profitability side as well, we're expecting an improvement to 770 crores versus 610 crores, and the stock has done very well. In general, two-wheelers have recovered because demand has come back, and the export markets, which were suffering, have now seen some normalcy in the last quarter or so. Back to you.
Okay, thank you very much for that. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us on the show. Mayuresh, thank you very much for joining in. Today we have had quite a few numbers. Stocks like Latent View, Aarti Industries, Rain Industries, Nazara too on the way down, reacting to a weak set of numbers. On the way up, you've got Shipping Corp of India up nearly 6%. MGL started the trade flat, but now has started seeing some buying. MGL has moved up nearly 2.5%. Anything in the earnings from the last 2 days which caught your attention, where you've upgraded or downgraded your estimates?
Afternoon, Rima. No, to a certain extent, I think shipping companies will report a decent set of numbers. So what Shipping Corporation reported, and as Mangalam rightly pointed out, I think the tanker or the crude tanker market has done exceedingly well. Dry bulk has always been a drag for shipping companies over the past few quarters. So again, I think Shipping Corporation, in terms of core reported numbers, the demerger, the expectations in terms of monetization of its land assets, obviously that props it up. So I think that estimation in terms of earnings outlook definitely was a beat compared to the street. I think in the same breath, you should probably be concentrating on GE Shipping as well, which probably stays put in the same sphere. Expectations in terms of spot rates for tanker markets remain stable. The NAV has grown at a very, very decent pace for GE Shipping as well. So I think shipping companies have done reasonably well. A few of these NBFCs, in my opinion, can continue doing well. So on our only lens, we are probably seeing more traction happening with interest rates expected to have peaked off, NIMs expected to stabilize, and expectations of disbursement growth picking up. So I think the stronger capital-owned NBFCs where leverage problem is not an issue and where asset quality pressures are coming off, L&T Financial stays on our buy watch list, and so on. I think select pockets is something that we are probably looking at.
Okay, all right, got that. Mayuresh, stay on. We'll have more questions for you, but we do have to take another quick break. We'll come back with more market talk in just a moment. Not a bad looking screen, and looks like the Nifty is in the mood to end things above the 18,300 mark today. So let's squeeze in some final thoughts with Mayuresh. Mayuresh, let's talk about the biggest index gainer of the day, and that is IndusInd Bank. Of course, there is some positive commentary that came in from UBS. I think they've upped their target price, and that's kind of reflecting well on the stock. But what is your own take on how it's placed? When the results came, there was a little bit of unease because I think slippages had gone up for IndusInd. What's your call?
So afternoon, Surabhi. No, I think on the overall construct, if you probably look at how the positioning is, the advances growth have been reasonable for IndusInd Bank. Again, it's very well diversified at this point of time in terms of their advance mix. Vehicle finance, 26% You've got microfinance, which is 11% and the other small components, including credit cards, around 4 to 5% as well. Now, asset quality pressures are clearly coming off. So GNPA is at 1.98. net NPAs at 0.59, clearly are indicating that the stress in terms of the book is clearly and steadily coming down. At the same time, NIMs are expected to stabilize around at 4.28. Even if you take a range of 4.1, 4.2, I think it's quite reasonable. Expecting that the provisioning has largely gone up at 71%, still expected to inch a little bit higher with those expected credit loss provisions that will start kicking in. And therefore, I think the kind of expectations that one really has in terms of earnings delivery should probably start ensuring that ROAs and ROEs both stabilize going forward as well. So yes, I think on the O'Neill lens, trading above all the key moving averages as we track. So anybody holding should hold on. And valuations also not very expensive at this juncture at 1.4 times in terms of price to adjust.
Okay. By the way, Mayuresh, any thoughts on Varun Beverages? It's up 13 times since listing in 2016. Never had a down year. I think 2016 perhaps it ended lower. After that, it's just been up and up and up, relentless. And now it's crossed 1 lakh crores in market cap.
Afternoon, Prashant. I think tremendous move. We held it on our global and local portfolios as well. We did exit that 2 weeks back. And even after that, I think it's given a tremendous move. Fundamentals remain extremely strong. So if you look at the kind of volumes that they've done a CAGR of almost 24%, 569 million cases last year. They have almost clocked 800 odd cases last financial year as well. When you're probably looking at the overall revenue growth has been very, very stable. EBITDA margins expected between that 19-20% mark. You're probably looking at the mix itself. CSD, which is carbonated soft drinks, around 70%. Water is 22%. Juices take the rest. And therefore, the backward integration along with expectations of margins continuing with strong volume growth expected both in the Indian and the African markets. I think the kind of earnings expectations keep on outdoing the kind of earnings delivery that they probably do, but a little bit too expensive and a late stage based on the O'Neill lens in our case as far as BBL is concerned.
All right. All right, Mayuresh, we'll leave it there. Thank you very much for joining us. Quick conversation as always, but interesting and insightful. Thank you very much for joining us. Well, I think we're going to end the day almost at the high point, which is 50 odd points. The high today has been made at 18,326, and which is very close to yesterday's high. Yesterday we got to about 18,344, just 20 points under it. But this is looking much better as compared to the bulk of the session. The bulk of the session we were actually flat to slightly up, but this is almost 50 points on the index. Let's look at the Bank Nifty as well. Take a look at whether there's a pickup there. There is 1/3% higher in the Bank Nifty. That's about 130, 140 points, and almost at the high point for the Nifty Bank as well. Broader markets, I mean, the advance decline gap did open up a little bit in favor of advances. So 300 stocks separate, gainers and losers. And once again, it's the broader markets where there is a huge move with so many names like Varun Beverages, which we were just talking about, but not just that, so many other moves, so many other stocks which moved with very large volumes on the upside. There were lots of losers as well, but nothing compared to those on the gaining side when you count volumes along with the price action. Rima.
You know, Varun Beverages' market cap has crossed 1 lakh crore mark, and it's more than the combined market cap of United Spirits and United Breweries. So that tells you something. Growth rate, of course, has also been on the higher side. A quick run through of the large cap stocks. IndusInd Bank, top Nifty gainer, nearing a 3% rally on the back of a UBS upgrade, where they say the valuations are lower than the 5-year average valuations. In the auto pack, Tata Motors, Eicher Motors reports numbers tomorrow. Divi's Laboratories, Cipla saw some gains. HDFC Life higher in trade. On the losing side, UPL, for the second day in a row, UPL is the top Nifty loser, down nearly 2% on the back of weak numbers. Dr. Reddy's L&T struggled a bit ahead of numbers. That's going to be the key watch point today.
Oh, absolutely. But from the mid-cap space, I mean, just don't let the mid-cap index fool you at all. Look at the list of gainers. Today, Minda Corp has had a good session, 5% up. KEC International is about 9 to 10% on the higher side. Cyient puts on 8%. These are big moves. Garden Reach Shipbuilders, 5%. Shobha is up 6%. And these are big stocks, very well-tracked, widely held mid-caps. So not very small stocks that I'm naming. And many of them have had a very, very good session for themselves. On the downside, of course, Aarti Industries really stands out with a 9% cut after a disappointing Q4 print. and some more declines on Nazara. Latent View as well, 10% down. By the way, yesterday's blockbuster listing, Mankind Pharma, has seen about a 3.5% cool-off today. But 30% gain yesterday, so maybe not too bad.
Okay, with that, we're going to wrap in closing bell, but don't go anywhere. Our special offering, Mad About Markets, comes up next.